Hello, home buyers. You may be in the $400,000 price range. We've seen quite a few questions coming from people that want to know what income is needed to qualify for a $400,000 mortgage. Seems like that's the magic loan amount or price point there. So I wanted to do a quick video to talk about that. The first thing is that the income needed for a $400,000 mortgage will vary based upon the loan program that you're going to need to get qualified for. So it'll be different for conventional, FHA, VA, and USDA. So let's talk about how much you're going to need for each. The first thing is we're going to establish a few assumptions. The first assumption would be that the tax rate is right around 1.5%. Another assumption will be that your homeowner's insurance might cost about $1,000 a year. Another assumption will be that you have no other debt on your credit report and that the entire amount of your income is being applied against your housing portion of your debt to income ratio calculations. And finally, we're just going to use an interest rate of 5.5% for this exercise. So as time goes on and rates change all the time, you're going to really want to get your specific scenario discussed with the lender, and we can help you there at Dream Home Financing. We'll link to that down at the end of the video in the description and also the first pinned comment. Okay, so now for conventional loans, we're going to also assume that you're going to put 20% down for a conventional loan. Not that you need to, but if you do, then you don't have PMI, which means you're able to afford more home, which also means that for a $400,000 mortgage, you need to make less money. So for a conventional loan of $400,000, putting 20% down, you're going to need income or combined income between yourself and a co-borrower of about $84,000 per year. Now for an FHA loan, you're only putting 3.5% down. Now the other part there is that mortgage insurance is required, so it doesn't matter how much you put down, you are going to be paying for mortgage insurance. However, you can stretch your buying power with an FHA loan. You're allowed to go up to 56.9% on the debt to income ratio. Now, most lenders aren't going that high. A lot of them will cap you at around 50. However, you can go and stretch it with an FHA loan up to 56.9 DTI, which means for FHA, you can get a $400,000 mortgage with an income of around $72,000 to $72,500, $72,000 to $73,000 in that range. Okay, if you are a veteran or active military and you have VA eligibility and you can qualify for a VA loan, that's a zero down loan. So that means that your $400,000 mortgage is buying a $400,000 home, and the debt to income ratios for a VA loan are going to be anywhere from 41 to 50% depending on the lender, because the lenders have the ability to adjust as they see fit. So for a VA loan, you might be looking at a $76,000 per year annual income to qualify for a $400,000 mortgage. And finally, USDA mortgages, USDA purchases are a zero down if you are buying a home that is located within a designated USDA rural area. There's a lookup tool on our USDA page which you could use that tool to figure out if there's a home you're interested in, whether it qualifies for USDA. USDA debt to income ratios, you're looking at anywhere from 41 to 44%. That means that you're likely going to need an income of about $86,000 to qualify for a USDA loan. So that's what you're looking at. If you want to talk to someone to get pre-qualified, to see what kind of loan amount you can afford right now based on the income that you have, then again, just visit us at dreamhomefinancing.com. Again, linking in the first pinned comment and in the description of the video. Appreciate you stopping and watching today. We will see you next time.